Okay, hope you're all doing well. In another trade, and yeah, could it have been better? Possibly. Actually, yeah, maybe. Um, you should never really trade on the weekend. Um, let's talk about the trade. So I got in at the 19. Let me just double check that actually. It was 19.9, 5, 195, just shy of the 19,200 mark. We had this horrible just up and down movements over the weekend, and I was just kind of monitoring and seeing how things were moving. And I thought to myself, ultimately, I think we're heading for a bearish week. So I thought I'll get in around a 200, but like an idiot, I used 50x leverage. So as you can see, very tight liquidation point around the 19,481. Things that potentially might go in our favour, the monthly open. As you can see, we had this really bullish candle, came through, tagged our short entry, rocketed past the 200-day moving average. Second candle came in, just tagged the monthly open, and then we came shooting straight back down. Almost certainly after that, we came back up again, and then we've had this kind of cup and handle kind of scenario here where we're coming back up and we've retested the open. We are, well, what time are we on now? Getting close to midday, so we've got a couple of hours, 2.5 hours to see how things materialise. Heading over to the Bookmap, we've came and tested each time. It's like almost a VWAP is acting as support here. We keep coming down, testing that support, and then we're going back up again. So it doesn't look good, if I'm honest. It doesn't look good. We do have some liquidity being built around the kind of 19,400 mark. These white lines here, that little white line indicates one big order. So whether that's institutional or whether it tries to maybe look at whatever the order size is, and then I think normally over 100 Bitcoin as a single entry is usually classed as a more of an institutional rather than a retail trader. But what I'm looking for us to do is to break beyond this VWAP line, just to kind of give us some sort of relative news that potentially it's going in the wrong way. Now, why have I decided to be an idiot and go with kind of higher leverage? Well, my kind of strategy changed a little bit. My mindset is that, well, we're starting off with a relatively short account size. It's like $500. So the plan is, with a hope, that we be risky at the start. We try to build the account quickly. And then as we start to grow the account size, we start to ratchet back that leverage. So what that means is, at a 50x leverage at $500, if, and that's a big if, we double our account to $1,000, we halve the size of the leverage. What that actually means is we reduce, as the account size is growing, the leverage is getting less and less, but the value per point remains the same, because as we're doubling up in account size, we're halving the leverage each time. So that's the mentality. So it's risky to start with, but we reduce the risk as we move along. So let's just see how it goes, and we'll just keep monitoring things. But yeah, I mean, life is a risk. The game's afoot. I like to see how the Bookmap is responding to things, and what does it look like a bit further up in terms of that heat map. Yeah. We like to see, or the market likes to see, these whole and half measures. So, perhaps we want to look at that 19,500 as a way in which we want to tag. That could be where we're headed. However, we do have some strong liquidity around this area that might get tagged. We'll just need to see. The other thing I've been looking at is the volume in the vector candles. And I've been looking at different strategies and trying to review when you see a sign of strength, I mean, right now we're not seeing it. If we go to the 15-minute, however, we can see here we kind of lollygagged around this kind of 21-day moving average, and then we blasted out. And again, these normally form when the volume, when you see big orders of single purchases. So if you see it like this one, you'd say, well, hang on a minute, that's just as, in fact, there's more volume here in this candle, yet the vector candle didn't form. Why? Well, you probably found that there was more of a, so this may have been many single buys of lower values, whereas this one, you may have had, one or two institutional trades that was of really high volume or really high purchase, which really, so it's the speed in which the vector candle moves up rather than, kind of slowly moving up or down. So that's the difference. And they always say, follow the smart money. So that would kind of make sense that you look at this and think, well, we blasted through which would have kind of been the zone of an order block, but we did come back down with volume, and then we came down further. We kind of looked at, kind of retesting the 200-day moving average, and now we spring back off it again. So got some smaller volume candles here, at least with what would probably be perceived as larger orders or large single big orders. So, we'll have to see. I don't feel confident is if I'm honest. Looking at how we've came back down each time, retested this VWAP and just marched on again. So that's where we are. The only thing we've got going for us though is we are approaching the high on the MFI money flow index, which is, as I normally always say, it's a measure of volume and price action. So we're steadily approaching the overbought position. So we'll see what happens. This has been pitiful. The squeeze momentum indicator. If we go back further, you want to see these really big high swings. This just normally means there's lower volume currently happening at this stage. But we'll see. As I say, we've got the New York market opening in a few hours, and that might bring us some fun. I'm waiting to see how the SPY opens. News is still bad. We still don't, war is still ravaging. Energy prices are still soaring. It's just Liz Truss is a gobshite. Who just doesn't seem to know what she's doing. So, in terms of the UK alone, we're just in a fucking sorry state of affairs, to be completely frank. Which is why we're seeing the dominance of the dollar just ripping up. I mean, let's have a look at the dollar. Let's see how we're doing on the dollar. Looks like it's at the 800-day moving average, and it's coming back up. It's retested the 200-day. If we see a nice little break from that, that could be a positive sign for us. I always like it when we test this 800-day moving average. This is a lovely average to be testing. We seem to always respect this quite heavily, so that's useful. What about the 10-year bonds? So right now, we do seem to be moving up, which is good for Bitcoin. Good in the sense that it's good for us, at least in our move of the short. So let's see, maybe we can get through this 200-day moving average and then on to further pastures new. This is a completely off-risk asset, and when the markets are getting scary, traders like to take the money off the table and go into a less riskier asset, which is why the bonds are going up. So let's see. I mean, look, we know where we are. Some people may look at this and think, mate, you're an idiot. Yeah, I probably agree with that. But there's no way, if I had a large account size of 10k plus, I wouldn't be. There's no way I'd be trading as risky as this. this is an experiment. Don't forget, this is kind of an idea to see how we trade and just we learn from mistakes. But honestly, I don't think it's such a bad thing to trade more riskier with such a small account size. I think as the account size grows, if the account size grows, then we're in a different position. We can start to look at scaling out our risk or scaling it back rather as we grow the account size. So that's the mentality. But we'll see how it goes. That's it for now. More educational content coming soon. I had to get the weekends out the way. I had a busy weekend, to be fair, and yeah, I think we'll leave it there, and I'll catch up to you guys soon. Peace out.